There will now be a series of videos on common indicators used in technical analysis. And we're going to start off looking at the moving average convergence divergence indicator, also known as the Mac Dee, MACD. The Mac Dee indicator looks like this indicator I have up on the screen. I'll make it bigger so that you can see. With the Mac Dee we have three settings. At the top left here I have the settings of the Mac Dee shown on my chart. My settings are at 12, 26 and 9. So what do those settings mean? So this first setting at 12 represents the previous 12 bars of the faster moving average. You'll see I have two moving averages on my Mac Dee, a red and the green. The green is the faster moving average, the red is the slower moving average. To get a recap of moving averages and how they work, please go back to the video on this course about moving averages. The second setting, that's at 26, represents the previous 26 bars of the slower moving average, which is the red moving average. And then the last setting, which is at 9, represents the previous 9 bars and the difference between the two moving averages. A common misconception with the Mac Dee is that these moving averages are standard moving averages calculated on closing price. But actually the moving averages are moving averages of the difference in price of these two moving averages. So our setting at 9 is the last 9 candles and the difference between these two moving averages. You'll notice there's also a histogram on our Mac Dee behind these moving averages. This histogram shows the same data as these moving averages but is displayed differently. You'll notice when these moving averages become tight and get close to each other, there's no or very little data shown on the histogram because there is no or very little difference between the two moving averages. I think the most important thing about indicators is learning how to use them for trading rather than learning the ins and outs of how an indicator works. So let's look how we can use the Mac Dee to trade. Now, with all common indicators, I strongly suggest using them to give us further insight and them complementing our trading rather than using indicators purely to trade. For example, a common way to use the Mac Dee is to use the moving average crossover as buy and sell signals, just like the moving average crossover on closing price that I showed you in a previous video. But what I'm suggesting is you do not purely use this crossover to trade, but that you look for signals in the market and then use indicators to give you further clarification of what you're seeing and speculating is correct. I've coloured these moving averages on the Mac Dee as red and green. When the red or slower moving average is above the green, that could indicate that price will depreciate and be bearish. When the green or faster moving average is above the red, that can indicate that price is going to be bullish and appreciate. If we were to follow this trend that we've looked at in so many of these videos, the pound against the dollar 4-hour chart, and we wanted to join this trend, perhaps in this area where there are pin bars and engulfing candles, we could use our Mac Dee as a second signal that our analysis is correct. You'll notice that here there is a crossover, a bullish crossover, which agrees with our analysis that price is uptrending. As price reaches this area and starts its downtrend, you'll notice the Mac Dee has a bearish crossover, signaling that price could change direction and go on the downside. If we identify that this trend could be over, we create a lower low and have some strong bearish momentum. We could use our Mac Dee once again to see if our analysis is correct, and you'll see that the bearish moving average is above the bullish, meaning price could depreciate. It might be interesting just to compare the Mac Dee crossovers with how price is reacting on our candlestick chart. So you'll see we have a crossover here, a bearish crossover, and I'll mark that with a trend line. We have another one here, another one here, 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 and here. So price is bullish, it's moving in an upwards direction. We have our crossover, our bearish crossover, and soon after price depreciates. We have another crossover here, being a bullish crossover, signaling that price could appreciate or go on the upside, and it does. We have another crossover here, a bearish crossover, and price depreciates. We have a bullish crossover just here, price goes on the upside, a bearish crossover, price soon depreciates. We have a bullish crossover here and price goes on the upside. So you'll see in this example the Mac Dee is very reliable and can identify the ends of pushes and pullbacks and price direction. With all these indicators that I'm demonstrating in these videos, please remember that they work best in trending markets, and in ranging markets they can give off many false signals. The setting I have for my Mac Dee at 12, 26 and 9 is a commonly used setting for the Mac Dee.